Hi, this is Zach here with the weekend edition of the US Chartbreakers here at Zach's Traders Cafe. It is Sunday, the 11th of June, and we're doing rather better here at Zach's Traders Cafe than Goldman Sachs, who were looking for 3,600 by the end of this year. So far, there are 700 points out or so, and they're still going. Actually, they've flipped up to 4,500 as their target. Here we're going for around 43.60 as soon as the end of next month, which seems to be a fair thing to do given that we've got a rising trend channel there from October. The current support zone probably just near the gap area or just below that gap area around 42.20, so 4200 to 42.20 at the lowest, maybe 42.20 to 30 if we can get away with it, and recent support around the 42.60 level, so certainly above that, looking for 43.60 in coming weeks. We do break down the worst we're looking for at the moment is the 50-day moving average around 41.50. On to the stocks and some AI-related companies. Advanced Micro Devices, the first one. Here you can see that we hit our first target there around $115. Above that, we're looking for a fresh leg to the upside with a resistance line projection there from this time last year. That's currently heading up towards $143, and we could see that as soon as the end of next month, especially while we remain above the top of that gap from the end of last month, around $115. Another stock on the front foot at the moment is Blue Apron Holdings. I don't think it's one that we've looked at here, but here you can see that we've just punctured the 50-day moving average for the second time this year. Hopefully this time it'll be more successful than the previous one. The view at this stage is, or this point, is that above $7 in the 50-day line, we're looking for a decent upside. The obvious area would be up towards the resistance zone back in March near the $10 area, but actually I think we could probably do a bit better than that, up to the top of that triangle at $12.50. As soon as the end of next month. It'd be nice if we remained above that old late May resistance around the $8 level, but certainly above the 50-day line. We're feeling relatively confident. Moving on to another stock which is worth a look at. We've looked at several times actually. Matis here. Managed to hit both targets that we were looking for. First one was around $5.20, second one around $7, so thank you very much. Now looking for the next level up, if that's not tempting fate, and we can see that is up to a line of resistance there from back in November up towards the $10 mark as soon as the end of next month. Probably, if you're fussy, you'd say $9.80. But that sort of area near to $10 looks as though it could be on the cards, especially while we hold above the old target around that $5.30 level, or at least where that resistance line is now from back in February. Moving along to a new name, but let's see if we can see it more often here. We've got Braze, and here we've had a gap to the upside through the old resistance there from back in March. That was around $38. Above $38, we're looking for a push towards a resistance line that I'm just about to draw now. And basically that's heading for $44 as soon as the end of next month, while we hold above that $37, $38 area and the old March resistance. Moving on to Global Indemnity Group, and a nice gap to end the week through the old resistance area, the initial 2023 resistance zone around 30.80. Above that, we're looking at the top of that broadening triangle from back in October as high as $40 and as soon as the end of next month. The reason for the relative optimism is the way that both the 50 and 200-day lines are now rising in parallel. Going on to another stock, which obviously is one of the most followed, depending on exactly where it is in its cycle, but the rug was pulled last week, and it's interesting that the shares of Gamestop managed to find support at the floor of that rising trend channel from back in December. The level there was the low of Thursday, so that was around 2010, and above that we're actually hoping with the shares to fill the gap up to $25 and eventually get up to as high as $31 by the end of next month. Obviously that's a punchy call, But having pulled the rug, one would imagine that most of the weak hands in the stock are out. At least we would assume that while we're above $20.10. Moving on to a interesting play, which is Disc Medicine. Here, a beautiful build to the upside over the last couple of months after the unfilled gap to the upside bear trap gap reversal that we had to start the rally at the end of December. Current view is at above initial June resistance around $42.30. We're heading up to as high as $60 by the end of next month at the top of a rising trend channel from September. Moving on to another, a stock which is a bit of a regular here, Immunogen. Here we've got the unfilled gap to the upside. We hit our initial target there around $15.50, and above that we're looking for a fresh leg to the upside as high as $24 by the end of next month on what looks like a very strong charting situation, given the way that after that gap we didn't get anywhere near the old support area, old resistance area rather, around $11. We just went straight up indeed. Moving on to a new name for the US Chartbreakers, and comes in the form of Joby Aviation. Here we're just attempting to break the main neckline resistance here around $7. If we can do that, it could be up to as high as $11 by the end of next month at the top of that rising trend channel from April last year. Upside valid while we hold above the $6 area, but obviously the cautious would wait for the main $7 zone to break first. Stock which gets its second airing here now is coming up. It's MGO Global. Here just the first signs that the shares are able to find support at old neckline resistance. That neckline resistance, basically the low of Friday, which was $1.70, and above that looking for as high as $5 by the end of next month. If you're cautious, obviously wait for $2.70 to break, which wouldn't be too much of a thing to wait for. Just on to another new name now, and comes with Marker Therapeutics. Unfilled gap to the upside to start June, and finding support at old May resistance was even better, so around the $1.70 area. Looking for the stock to give us an end-of-day close through the 200-day line at $2.64. If we can get that, then we could be as high as $5.30 by the end of next month, and that equates to the top of a broadening triangle from September last year. But looking pretty decent while the longer we stay above the $2.10 zone, or the $2 zone at least, which was the initial June resistance. On to a stock which is again a new situation, Olema Pharmaceuticals. Here a nice little breakout here through the initial May resistance, $7.50. Above that, looking at the top of a rising trend channel from back in June last year, so 1 year resistance line projection, that's heading for $13, and we're hoping for that to be hit as soon as the end of next month. And really no price action back below the 50-day line, currently at $5.20. Just a few stocks to go now. First one is coming up, and it is Oil-Dri Corporation of America. Gap through resistance, which is impressive. Above that resistance, around $45.40. We're looking for the top of the rising trend channel from this time last year again, and that's heading as high as $55, or $54 to be conservative, by the end of next month. But looking for the shares to hold 45 ahead of 54. Finishing off with the stock which has had multiple days to the upside, and I suppose the bears might be slightly worried now actually. Here we've got Tesla. The shares hitting our target there around $240. Above that, but still looking for as high as $280 by the end of next month. And don't really want to see any lasting price action back below the floor of that gap there around the $235 level. So above $235, looking for as high as $280 on Tesla as the company looks to power up across the US. That's it for me today. More updates during the week.